Hey everybody, welcome to today's video, and today I'm going to be talking about EVgo, one of the largest EV charging companies in the US. They're currently worth more than $1.6 billion, but they've got a really massive problem that I think could destroy their business if they don't do anything to fix it. EVgo is focused on DC fast charging, and they've got some of the fastest chargers out there, going up to 350 kilowatts. Now, they own and operate all of their stations. Some other EV charging companies don't. Probably the best example of that would be ChargePoint. They don't own their chargers. They simply manufacture the hardware and they sell it to customers who then go on to own it themselves. So ChargePoint earns their revenue from that upfront sale of hardware, but beyond that, they don't earn any money from the sale of electricity. Now, EVgo, on the other hand, since they own their chargers, they generate revenue from the electricity. So unlike ChargePoint, they don't have revenue coming in like right off the bat when they sell the hardware because they're not selling the hardware, they're owning it. But they do have a continuous stream of revenue coming in from the sale of electricity. So in the long run, EVgo theoretically ends up making more money than ChargePoint would per charger. Now, although it sounds really good to have a continuous stream of revenue coming in from electricity sales, there's a really big problem with this model, and that's just the massive upfront investment that these companies have to make to build all of these chargers and maintain these networks that they own. Fortunately though, EVgo has a pretty solid balance sheet. This is their most recent one that they put out September 30th last year. At this time, they reported having over $300 million of cash. They had some in inventories and accounts receivable, those sorts of things, but definitely good to see a lot of that was made up from cash. And then for the longer term liabilities, we've got the property and equipment at $264 million, and then operating lease right of use assets at $44.5 million. Now, these two kind of go hand in hand with each other. The first line there, the property and equipment, that's basically all of these chargers that they own. That's what the majority of that number is consisting of. And then for the operating lease right of use assets, that's basically the land that they've got leased out that the chargers are on. So these two, they kind of go hand in hand with each other. As they continue growing their network, these two numbers will continue rising as they have more of these assets on their balance sheet. Now, all of those combined gives EVgo total assets of almost $730 million. And then as for liabilities, those are only at $213 million. So subtracting those liabilities from the assets gives EVgo a pretty solid book value of $516 million, which, obviously there's companies that have much better book values, but as far as EV charging companies go, EVgo definitely has one of the more solid balance sheets out there. However, if you look at EVgo's balance sheets and compare each quarter or each year to each other, you can see that they've been losing cash slowly over time. So back at December 31st, 2021, they reported having $484 million of cash, and now, as of September 30th, 2022, they're down to $300 million of cash. So we would expect that number to be lower by the time the quarter 4 balance sheet comes out. So, this is the problem. It's very common among all of these EV charging companies and all of these smaller companies across the board during this recession that just don't have access to a lot of funding, is just access to cash that they can use to continue growing their business as usual. Now, for EVgo particularly, I think for the time being, they're okay. I'm sure they're going to need to do some more capital raises going forwards. I don't think they're going to be able to go on forever with just $300 million of cash. If you look at their income statement, you can see their revenues are just nowhere close to, being something profitable for them quite yet. So it's going to take years still probably for EVgo to become profitable and start generating cash on their own. Now, although a lot of EV charging companies are struggling to raise funds right now with this recession we're in, I don't think this is something that EVgo is going to have to face immediately. I'm sure it's going to happen soon, but hopefully by the time they really need to raise more funds to keep their business going, the economy will be in a better place and interest rates won't be as high and there will be more investors out there in the market. So EVgo will hopefully be able to raise funds cheaper and easier than they would be able to do today. So that's one of my concerns with EVgo, but it's not the big problem that I think could destroy their business if they don't do anything to fix it. That problem is their reliability. A couple of weeks ago, I ran a poll on the channel asking which EV charging network has the most reliability issues. These could have been, the chargers being broken, out of service, the app doesn't work, etc. Any sorts of issues that you'd have in the charging experience. This poll got 38 votes, so it's not the most scientific set of data, but people still, they voted for EVgo over any other charging network out there. The main ones I had here was ChargePoint, Blink, and EVgo, and then I just had the other section. There's only 4 options here for these polls. So this includes any other charging network that wasn't these 3. But yeah, people voted for EVgo over anything else. Now, if you look at EVgo's app on the App Store, you can see that most people have a pretty negative experience using this app or their network. Some of these reviews, a lot of these are kind of a mix between problems with the app and problems with the charging hardware itself. So, you can't exactly pinpoint whether it's their hardware or the app that's causing these problems, but still, this all kind of is one and the same thing. It's part of the experience of charging. So if there's problems with the app or with the hardware, it doesn't necessarily matter because people are still having a poor experience charging their vehicles. Now I'm just going to read a couple of these reviews real quick. This person says, out of all the major networks, EVgo is the absolute worst. They've used it several times throughout the course of a year, and it's never plug and play at the stations. There's countless charging errors, card readers don't work, support is useless, never fixes the stations they're using. Stations will be out of service for months and end up without the app reflecting that. So the app is displaying that they're working, but they're not. My advice is to plan trips around other charging networks and avoid EVgo at all costs. This person says 2 stars for the fact that it lets me charge my car, but it's the worst possible app for doing so. So slow, takes 5 minutes to go from opening to starting the charge. Takes forever for each step of the process, signing in, making the payment, giving the charging status. They wonder why there's not just a simple RFID payment option. So people are kind of not very happy with the charging experience using EVgo. Of course, there are some positive reviews here. There's a few 5-star reviews, 4-star, 3-star. Most people, though, are just a 1-star review. It's just a horrible experience for them. Now, looking at Electrify America, one of EVgo's biggest competitors, another DC fast charging network that owns their stations, they've got much more favorable reviews. These are at 4.3 out of 5 stars, so much better than what we're seeing over there with EVgo. Of course, here with Electrify America, there are still plenty of 1-star reviews, but there's a lot less of those and far more 5-star reviews, so people having a really good experience using this app and the chargers. So looking at that YouTube poll and all of those App Store reviews, we can see that using EVgo is just not a very good experience at the moment. And this is a big problem for not only EVgo, but for the whole EV industry as a whole, between the vehicles and other charging networks. Because if people are having a horrible experience with EVgo, they're going to have a poor perception of other charging networks and possibly the whole process of owning an EV altogether. Now, taking a step back, you can see that EV charging is basically just a commodity product. In the long run, once there's more competitors out there and there's more chargers out there in the world, you're going to be able to choose, between what network you want to use, which one has the lower price, which one has the better experience, all of that sort of things. That's not necessarily the case today because there's just not a lot of the hardware out there yet. But in the long run, in 10 and 20 years or something, there's going to be a lot more charging station equipment out there. So in the future, if people have problems using EVgo stations, they're not going to mess around with them anymore. Once there's a lot of competition out there, they're just going to go over to Shell Recharge or Electrify America. Whoever's there doing it better, they're just going to use them and they're never going to use EVgo again. Fortunately though, it seems like EVgo is aware of this issue and they're trying to take some steps to improve it. We can see in this article, they just put this out on January 12th this year, just a few weeks ago. They've announced a new program called EVgo ReNew, where they're going to enhance and improve their fast charging experience nationwide. They say it's an enhanced and comprehensive maintenance program designed to ensure stations across EVgo's charging network meet their quality and technology standards. Through the program, EVgo plans to replace, upgrade, or in some cases, retire hundreds of stations over the coming year, with the goals of enhancing charger availability and building range confidence for EV drivers of all types. This effort includes ramping up in-person preventative health checks of their chargers, improving system monitoring, diagnostic and recovery tools, replacing legacy equipment, and retiring problematic chargers if replacement or upgrade is impractical. EVgo ReNew builds on EVgo's existing charger maintenance efforts, which include 24/7 monitoring and preventative health checks at charging stations as part of its commitment to industry-leading uptime. EVgo obviously wants their chargers to be reliable and continue working, not only for the long run, but for the short run as well. Like we just discussed, in the long run, this will damage their brand reputation. People won't want to use these chargers, but even in the short run, if their chargers aren't working, they're not able to generate any revenue from those chargers. I think EVgo is trying to turn things around, but we're going to have to wait and see how successful this program is for them. It would be great if this does work out, because we really need higher quality DC fast chargers. And then, beyond that, we're going to need a lot more quantity-wise as well. So hopefully on both of those fronts, we can see improvements. That's about it for today's video, though. I hope everybody enjoyed, and I'll see all of you in the next video.